is CBX Business News. The business news headlines are brought to you by QMax Wealth Management, making more possible. A sharp economic contraction, growing global risks, and warning signs for the world economy. Good evening and welcome to CBX Business News for Wednesday, May 20, 2026. I'm Rashel Moncrieffe. Thanks for joining us. Coming up, Jamaica's economy contracts by 5.9% in the first quarter as Hurricane Melissa continues to weigh on productive sectors. Also ahead, the Caribbean community warns that global conflicts are threatening regional economies as the bloc pushes to expand trade partnerships beyond its traditional allies. And later, the United Nations warns the global economy could slow more sharply as oil shock concerns intensify. Stay with us as we unpack these stories and more right after the break.
Been coming along well.
Thanks, man. You know, it's a long time I've been working at it.
I can see that. I saw your mail by the gate, so I'll pick it up for you. But tell me something. Why are you still receiving dividend checks by mail?
What do you mean about that?
You need to give JCSD a mandate.
You know, me hear about the mandate then. I'm going over there right now.
A mandate means giving instructions to the Jamaica Central Securities Depository Limited, JCSD, relating to the handling of your dividend or interest payment. There are 3 types of mandates. The first is a bank mandate. The second is a hold mandate. Lastly, we have what we call a third-party mandate, with which the investor may wish to send their dividend or interest to someone other than the parties on their account or institution of their choice.
The local news is brought to you by Derrimon Trading, better from the start. The Development Bank of Jamaica, facilitating economic growth and development. Caribbean Flavors and Fragrances, tease the senses, and Pulse Investments. Welcome back to CBX Business News. We begin with new figures pointing to a steep economic downturn for Jamaica. The full economic shock from Hurricane Melissa is now becoming clearer as fresh data from the Planning Institute of Jamaica, PIOJ, emerges. Speaking during the Institute's quarterly press briefing earlier today, PIOJ Director General Dr. Wayne Henry revealed Jamaica's economy contracted by an estimated 5.9% during the January to March 2026 quarter. This, he says, comes as the country continues to grapple with widespread disruptions to businesses, jobs, and consumer activity following the passage of the storm.
We are reporting that the Jamaican economy contracted by an estimated 5.9% during the January to March 2026 quarter compared with the corresponding quarter of 2025. The performance for the review quarter largely reflected the lingering impact of Hurricane Melissa on productive activities. The impact of the hurricane led to an estimated contraction in all industries with the exception of financial and insurance activities and public administration and defense, as well as a reduction in the employed labor force and lower levels of business and consumer confidence.
Meanwhile, Jamaica's economic recovery is expected to remain under pressure for months to come, with the PIOJ projecting the economy will contract between 3 and 4% during the April to June 2026 quarter. Dr. Henry says recovery across several sectors is progressing slower than initially anticipated, with some industries expected to take up to 3 years to fully rebound.
For April to June 2026, growth prospects for the economy are generally negative. This is based on the expectation for lower output as industries continue to recover from the adverse effects of the hurricane. It is projected that the economy will contract within the range of 3% to 4% relative to April to June of 2025. It is anticipated that GDP performance will be influenced by 1. Continued geopolitical tensions in the Middle East, which have resulted in higher energy and fertilizer prices. In addition to prices, the conflict has adversely affected investor and consumer sentiments that may impact overall demand for goods and services in the short term. And 2, lower production, as industries are still within the recovery process from the hurricane, which may take up to 3 years.
Despite the near-term weakness, the Institute is projecting economic growth between 1 and 3% for the 2026-27 fiscal year, with stronger recovery expected during the second half of the fiscal period.
The projection for fiscal year 2026-27 is for growth within the range of 1% to 3%. Most industries are forecasted to record growth, as a recovery from the weather-related shock in 2025 will become more pronounced in the latter half of the fiscal year. That's between October 2026 and March 2027. There are upside potential and downside risks to this forecast. The upside potential to growth include 1. Early resolution to the ongoing conflict in the Middle East, and 2. Favorable weather conditions, supporting the continued strengthening in agricultural output and water production.
At the same time, the PIOJ is warning that surging global oil prices linked to Middle East tensions are creating new risks for inflation, tourism, and economic growth. The country's economic planners say Jamaica remains highly vulnerable to external shocks, particularly those affecting energy markets and major trading partners. Dr. Henry notes rising oil prices are already placing pressure on key industries, with the overall impact expected to depend on how long the geopolitical conflict persists.
Jamaica's economic structure makes it highly sensitive to global shocks, especially those affecting major trading partners. The rising commodity prices, in particular oil prices associated with the ongoing conflict in the Middle East, is exerting pressure on trade and output performance. The duration of the conflict will determine the scale of the impact. Given the central role of oil in production, price volatility has significant implications for inflation, the trade balance, and real GDP.
The Institute says higher oil prices are already increasing pressure on businesses and households across the economy.
Rising oil prices directly increase electricity and petroleum costs. Additionally, businesses pass higher energy costs on to consumers, further fueling inflationary pressures. This cycle may lead to a rise in nominal wages and further entrench higher price levels.
That was PIOJ Director General Dr. Wayne Henry. In other news, Jamaica is moving to reshape its labor market for the digital economy with a new task force to guide national policy on artificial intelligence, AI, remote work, and technology-driven jobs. Making his contribution to the 2026 sectoral debate on Tuesday, Labor and Social Security Minister Pernell Charles Jr. says AI, digital labor, and remote work are already changing the global economy, making it critical for Jamaica to modernize its labor policies and prepare workers for new industries.
Artificial intelligence, remote work, digital labor, and technology-enabled industries are already transforming the global economy. That said, the ministry is therefore advancing a comprehensive future of work agenda built on 4 major pillars. Hear me now. Modernizing labor policy for the digital economy, establishing remote work standards, expanding protection for non-traditional workers, and preparing Jamaicans for the AI-driven industries. I want to therefore announce, and we will get the support of Minister Wheatley, the establishment within the ministry of the Future of Work and Digital Labor Task Force to guide Jamaica's response to these emerging labor realities.
Charles says the task force will unite public and private sector stakeholders to develop a national strategy for the future of work.
This task force will bring together representatives from government, private sector, BPO industry, heart, academia, digital entrepreneurs, and youth, all come together to develop a strategic roadmap and a national response to the changing world of work. It's going to examine all of what I said before and make sure that our policy is strengthened and so Jamaica can remain competitive in the digital economy. Mr. Speaker, stakeholder consultations will commence immediately, with initial recommendations to be provided within the next 6 months. The ministry will also begin the development of our national remote work guidelines, and a pilot will be done for the structured remote work framework in collaboration with selected public and private sector stakeholders.
That was Jamaica's Labour and Social Security Minister Pernell Charles Jr. We move to the latest updates from the JSE Equities. In Wednesday's trading session, the JSE market activity resulted in the trading of 111 stocks, of which 41 advanced, 52 declined, and 18 traded firm. Leading the winners are Sagicor Real Estate X Fund, Pulse Investments Limited, Kintyre Holdings JA, and Mailpack Group, while leading the losers are ISP Finance Services, Iron Rock Insurance Company, Caribbean Assurance Brokers, and Cygnus Real Estate Financial JMD. The main index advanced by 301.76 points to close at 349,494.94 points. The junior market index, however, declined by 30.68 points to close at 3,037.44 points. It's time for the Market Education feature, brought to you by CARICRIS, Regional Ratings, Global Standards. In today's Market Education feature, we're talking about Real-Time Gross Settlement, or RTGS. RTGS is a payment system that allows banks to process high-value transactions almost instantly and individually rather than grouping them together for later settlement. This improves efficiency and reduces settlement risk within the financial system. RTGS transactions are final and irreversible once completed, making the system a critical part of modern banking infrastructure. These systems are typically operated and supervised by a country's central bank and are mainly used for large value interbank transfers that require immediate settlement. That was the Market Education feature, brought to you by CARICRIS, Regional Ratings, Global Standards. And that's it for the local news segment. Please stay with us. The regional news is up next. The local news is brought to you by Derrimon Trading, better from the start. The Development Bank of Jamaica, facilitating economic growth and development. Caribbean Flavors and Fragrances, Tease the Senses, and Pulse Investments.
This project marks the celebration of our 30th Hall of Fame and aims to highlight the achievements, challenges, and invaluable lessons of those who have shaped and are shaping the future of our economy. Our aim is to celebrate the voices and stories of 30 remarkable leaders in Jamaica's private sector. Join us as we explore these narratives of resilience, leadership, and vision.
Welcome back. And now for the regional business news. The Caribbean is being caught in the crossfire of a more fragmented global economy, and CARICOM says small states are feeling the strain. From energy price shocks to supply chain disruptions and geopolitical tensions, regional officials say the international environment is becoming more volatile for trade-dependent economies. Speaking at the Center for International and Border Studies conference in Guyana recently, CARICOM Assistant Secretary General for Foreign and Community Relations, Elizabeth Solomon, says the region can no longer afford to depend too heavily on traditional economic partnerships.
Our hemisphere is navigating geopolitical shifts deeply interconnected with conflicts far afield, such as those in the Middle East and in Eastern Europe, even as we navigate significant policy shifts in this hemisphere. These resulting upheavals range from supply chain disruptions to energy market fluctuations. They test the principles of international law that serve as the primary shield for small states. To navigate this environment, CARICOM has embarked on a deliberate strategy of diversifying external relations, anchored in the principles of South-South cooperation. We are witnessing a historic deepening of ties with the African Union and individual African states, for instance, as evidenced by our Memorandum of Understanding with the African Union. The CARICOM AU Summit last year has contributed to burgeoning cooperation in health and business and in greater collaboration in pursuing reparatory justice.
That was CARICOM's Assistant Secretary General for Foreign and Community Relations, Elizabeth Solomon. Guyana may be producing more oil, but its economy is still feeling the pain of the global fuel volatility. President Dr. Irfan Ali says rising shipping and energy costs linked to the Middle East crisis are now filtering through the local economy. In a statement on Tuesday, Ali revealed the government has already surrendered more than 100 billion Guyanese dollars in tax revenue each year after cutting fuel excise taxes to zero. He says the move was necessary to keep transportation and energy costs from rising even faster.
When we took excise tax to 0%, that translated into approximately $500 saving for citizens on every gallon of diesel or gasoline purchase. It was a $500 saving, providing substantial relief to households, businesses, and the wider economy. For minibus operating in Georgetown and consuming an average of, let us say, more than 12 gallons of fuel per day, which is 50 liters, the policy delivers savings to about $6,000 per day, directly improving, of course, profitability and helping to keep fares affordable.
But with import costs continuing to climb, the president is urging the private sector to share some of the burden as global volatility pushes up the cost of imported refined fuel. It is also significant to note that despite its rapidly expanding oil industry, Guyana still imports refined fuel, hindered by a lack of domestic refining capacity.
We have to approach this issue together. When we had a reduction in the cost of fuel at the pump, we did not see a corresponding reduction in the fares charged by anyone. When the government intervened and brought the excise tax to zero, we did not see a corresponding reduction in fares. So we are asking those who are supplying the public service to be fair to the consuming public, and for the consuming public to understand the role of government and what we have done already, saving them hundreds of billions of dollars combined. So I call upon all the stakeholders, the importers of refined products, to adjust their profit lines in this period of volatility.
That was President of Guyana, Dr. Irfan Ali. And in corporate news, consumers are pulling back and A.S. Bryden & Sons results are showing it. The distribution group reported a steep drop in first quarter profits after weaker demand and regional disruptions hit sales across key markets. According to the company's latest unaudited financial statements, net profit attributable to shareholders fell to just $217,000 for the 3 months ended March 31, down from $2.4 million for the corresponding period last year. Revenue also declined to $141.2 million. Operating profit more than halved to $3.8 million during the period under review. The company says higher alcohol duties in Trinidad and Tobago, softer consumer spending, and a weaker tourism recovery in Jamaica following Hurricane Melissa all contributed to the decline. Despite the earnings drop, the group's cash flow improved during the quarter, with operating cash generation rising to more than $12 million. It's now time for news from the Trinidad and Tobago Stock Exchange. Overall market activity resulted from trading in 24 securities, of which 8 advanced, 7 declined, and 9 traded firm. Today's winners are One Caribbean Media, NCB Financial Group, National Enterprises, and Scotiabank Trinidad and Tobago, while leading the losers are Trinidad and Tobago NGL, Unilever Caribbean, Guardian Holdings, and Point Lisas Industrial Port Development Corporation. Trading activity resulted in the following movements. The All TNT Index declined by 0.64 points to close at 1,421.20. The Composite Index, however, advanced by 1.46 points to close at 993.96. The Cross-Listed Index also gained 0.53 points to close at 75.16, while the SME Index remained at 81.70. And we take a short break, but please do stay with us. The international news segment is up next. Welcome back. In international news, the United Nations UN is warning that the global economy is slowing more sharply than previously expected, as rising energy prices and supply disruptions linked to the Middle East conflict continue to weigh on growth prospects worldwide. Speaking at the launch of the mid-2026 World Economic Situation and Prospects Update on Tuesday, UN DISA Director of the Economic Analysis and Policy Division, Shantanu Mukherjee, says global GDP growth is now projected at 2.5% in 2026 and 2.8% in 2027. He says the downgrade reflects worsening conditions across global energy markets following the escalation of geopolitical tensions.
What began as a blow to energy markets on the 28th of February has turned into a broader supply shock of uncertain scope, magnitude, and duration that is rippling across the world. In the space of just 11 weeks or so, this has forced us to revise our earlier forecasts for global GDP growth downwards to 2.5% in 2026 and 2.8% in 2027.
The UN's baseline forecast assumes oil prices ease later this year and that some economies cushion the impact by drawing down strategic reserves and stockpiles. However, Mukherjee warned that under a more severe scenario, global growth could slow to just 2.1% in 2026, marking the weakest performance since the COVID-19 pandemic and the global financial crisis.
In this setting, we assume that oil prices begin to ease in the second half of the year and that some of the impacts are relatively cushioned by country-specific factors, such as the drawing down of reserves or stockpiles in major economies. In a more adverse scenario, global growth falls to only 2.1% in 2026, one of the weakest outcomes since the beginning of this century, outside of the COVID-19 pandemic and the global financial crisis.
That was UN DISA Economic Analysis and Policy Division's Director, Shantanu Mukherjee. And in Asia, infrastructure activity continued to show signs of resilience despite higher energy costs. India's infrastructure output expanded 1.7% year-over-year in April 2026, accelerating from revised growth of 1.2% in March, despite mounting energy-related pressures linked to the Middle East conflict. While growth remained below last year's average pace, the latest figures pointed to continued resilience across key sectors of the Indian economy. The increase was largely driven by stronger production of construction-related materials, with cement output climbing 9.4% and steel production rising 6.2%. Electricity generation also strengthened, increasing 4.1% compared with growth of just 0.8% in March. However, higher oil prices continued weighing on petroleum-linked industries. Refinery products output declined 0.5%, while crude oil production remained in contraction territory at 3.9%. Natural gas production also fell 4.3%, and coal output dropped sharply by 8.7%. Meanwhile, central banks across emerging markets are also moving cautiously as inflation risks begin rising again. Nigeria's central bank kept its benchmark interest rate unchanged at 26.5% on Tuesday, as policymakers weighed rising inflation pressures against broader concerns surrounding economic stability. The decision marked the bank's first monetary policy meeting since the outbreak of the Iran conflict, following a 50 basis point rate hike in February. Central Bank Governor Olayemi Cardoso says authorities are maintaining a cautious and watchful stance aimed at containing inflation expectations and preserving macroeconomic stability. Nigeria's annual inflation rate rose for a second consecutive month to 15.7% in April, marking the highest level since November and ending an 11-month stretch of decline. declining inflation. Policymakers also left other monetary settings unchanged. The asymmetric corridor around the benchmark rate remained at positive 50 and negative 450 basis points, while the cash reserve ratio stayed at 45% for commercial banks and 16 for merchant banks. Meanwhile, the liquidity ratio was maintained at 30%. And that's it for the international segment of the newscast. The news recap is coming up on the other side of the break. And now to recap our top stories. In the local news, Jamaica's economy contracts 5.9% as Hurricane Melissa hits output. Regionally, CARICOM warns global conflicts threaten regional economies. And internationally, UN warns global economy faces sharper slowdown from oil shocks. Those were the stories making today's CBX Evening News. On behalf of the entire production team, I'm Rashel Moncrieffe. Thanks for watching CBX, your region, your business, your source.